JJ the CPA here. Hope you're doing well. Sorry for the red eyes. It's after 2 a.m. There's so much going on. Wanted to let you know about something I'm pretty excited about. We've been waiting for this, and I have been searching for this, and the IRS came out with this somehow under the wire, didn't tell no one. And it's about the employee retention tax credit as it relates to how you go about getting the retroactive tax credit back to March 13th, 2020. So I'm going to go ahead and share my screen here real quick and pull up this. And so, I am literally constantly looking. And I went to the IRS website like I always do and look at the news. And so I'm just going to point out to you, like, nothing here, anything about ERTC. And if you go to, and then I'm going to show you how we backdoor to it. If you don't mind, I'm just going to show you that I'm constantly going to this page. Okay, hasn't been updated since November. This is on the credits, but we got a good one here. And see, this is saying, hey, we got some updated info to give you. You need to check back. All right, so here's the deal. Did its word search, IRS employee retention tax credit, accounting today. Thank you so much, Michael Cohn. So this came out on the 25th, 4:41 p.m. So at this point, about 10 hours ago. I've been putting together some other videos, but I want to put this together. So anyways, here it is. What? Like, I don't even know how you'd get to this page. Thank you, Accounting Today, for bringing it, because it's down in home and form and instructions and then post-release changes to forms. Okay. Anyways, and then supposedly this thing came out on the 22nd, which I just am like, gosh, dang it. I mean, I've been looking constantly. So here we are. I'm going to walk you through this, but here it is. If you did not file your Form 941, then file your Form 7200. You take your retroactive amount of your employee retention tax credit back to March 13th, and you pull it all on your fourth quarter Form 7200. If you haven't filed 941, and for whatever reason you don't want to file a Form 7200, well, then you can take that credit and put it all on the fourth quarter Form 941. Or if you have already filed 941, well, you can't file Form 7200 for 2020 any longer, for fourth quarter 2020 any longer, because you can't file Form 7200 after you file Form 941. So then what do? Well, you now file Form 941X, which we always knew to be, in essence, the next step. I personally was hoping that the IRS would have maybe come up with something. Maybe they will, but based on this, I don't think it's going to be the case. But I was hoping the IRS was going to come out with maybe an amended type Form 7200 that you could check a box and report the information you'd otherwise report on a 941X. So here's where it's at. It's the domino. 7200 is your first way to go if you haven't filed 941, or you can file 941 with the credit. And if you miss both those things, then you can do a 941X. Now, let me be clear. For those of you that are going to qualify for this employee retention tax credit in 2021, well, first quarter Form 941 isn't due till April 30th. You can be filing the Form 7200 now. And guess what? As you're going through now the quarters in 2021, because this has been extended to June 30, 2021, the way to get it the most, like the quickest way to experience the benefit here is for you to reduce down your payroll deposit by the amount of your credit, because then you're experiencing it immediately. So you do a payroll and now you've got money that you got to get to the IRS, your payroll tax deposit. Well, you can reduce that down dollar for dollar on whatever your tax credit is. And then don't forget, the sick leave and the paid family leave tax credits are still in play. Those are through March 31st. The employee retention tax credit is through June 30, 2021. But you have all opportunities or all remedies or all options now as you're moving forward in 2020. You can reduce down the payroll deposit. You can file a Form 7200, or you can just wait and file it on a Form 941. I'll circle back to that, but I did want to make sure I'm getting to what came out with the IRS on this page over here. And so basically, if you didn't get requested PPP forgiveness, kind of weird. What this comes down to, though, is if you haven't filed for PPP forgiveness, or you haven't received PPP forgiveness, and you can go, hey, timeout, bank, timeout, because you want to do that. Or you put in for PPP forgiveness and you got denied, or whatever the circumstances are that you didn't get the PPP forgiveness. But it makes it real plain here that you can claim the employee retention credit for 2020 on the fourth quarter Form 941. It does say right down here that you can instead also just choose the regular process of filing. So again, for those of you that, like I did with my clients, I didn't have the payroll company file the 941 so that we could get the Form 7200s filed. And so we did the Form 7200, boom, got it all in the fourth quarter. And then now it's going to get reflected on the Form 941. I tell you what, you probably want to listen all the way through this if you're involved in this in any way, shape, or form. Don't just take this. Hear me all the way through, because I was doing a seminar earlier tonight just with my 12-week group, and I really was walking through two of them on some of the details that I think help click how this works. But here's the deal. So this is acknowledging by the IRS that there is the, basically we have the Stimulus Act that is allowing you to be able to take this even if you got PPP. Because when the CARES Act came out, it was either or. You got the Employee Retention Tax Credit or you got PPP. And it didn't matter when you got PPP. The IRS said no matter when it was originated, you didn't get the ERTC out of the CARES Act. Then what was signed into law on December 27th, obviously this Stimulus Act that we're excited about, it said, you know what, doesn't matter if you got PPP, and we'll let you go back retroactive to March 13th and take the wages on that date forward for the tax credit. And I'll refresh on what the credit is and how it works. But basically it's saying, hey, if you're an eligible employer, you can go ahead and take it. But what they're making clear is that you can either use these wages for the employee retention tax credit or for PPP forgiveness. And I'll just make a side note, you can only use wages for one benefit at a time. So if you have wages on an employee that has sick or family paid leave, well, you can use wages for one of those, or you can use it for the ERTC, or you can use it for PPP forgiveness. Stated another way, whatever wages you put in for PPP forgiveness, you have to subtract from that payroll amount the wages and the health insurance that you're using for any of these tax credits. So one of the things I want to note to you, and that's kind of, you have to know the intricacies of the filing and how this originated. And I've been following this, of course, since before this all began. But one of the things to note here is that when the Form 7200 came to life, because it didn't come into an existence until March of 2020, but when it came into existence, it didn't have a section for the first quarter. So I'll pull this up really quick here and see if I can't get to this quickly, because I want to show you what I'm talking about here. But on this Form 7200, oh, that's the instructions. Hey, and by the way, while I'm finding this, if you don't mind, I am doing a deep dive on the employee retention tax credit. So I'm gonna put a link to that in the body of this. I think you will like it. If you've taken any of my seminars before, this is new, expanded, quite a bit of detail, and you get immediate access to all the worksheets, flow charts, and Excel spreadsheets when you sign up. You immediately get access to that. You don't have to wait till the Zoom to get it. And then I also put together this research video that most people on YouTube probably aren't going to care about it. So anyways, but you get access to that video, so you don't even have to wait till the seminar for that. All right, let me get back to this. On the Form 7200, there's no first quarter listed here. So even though it came out in March, as you see up here, there was no first quarter listed. Well, if we go to the instructions, okay, I'm not going to find it for you, but basically you can go and you can find the instructions. And what it does tell you is that you would report, okay, talking about back in the day now, okay, IRS said, hey, if you have any of this credit, report it on your second quarter 941. So we just went in a time machine for a second, and we're back down in March and April, and the IRS is saying, you know what, if you have the credit, it's back to March 13th, just put it on your second quarter 7200 and or put it on your second quarter Form 941. So the reason I want you to note that is that right here it's saying, hey, if you have wages that you didn't put on your second or third quarter Form 941, then you can put it all on your fourth quarter. So for those of you that really get technical on this stuff, which I love, I don't want you to be like, well, wait a second, it doesn't say first quarter wages here, because we know that the employee retention credit goes back into first quarter, back to March 13th and after. So anyways, that's why it's saying that, which when you know all that, then you should feel continued comfort that you'll just report all of this on your fourth quarter, whatever, for 2020, meaning 7200 or your 941 or your 941X, which I'll talk further on in a minute. Now, one of the things that's unfortunate here is that it does make it clear that if you have filed for forgiveness and you got it, as it stands right now, you don't get to include those wages during the covered period on your credit calculation. So I'm going to circle back on that one as well. So anyways, you can also report all of it on the Form 941. And if we go to Form 941, because there are a number of payroll companies, I've been a little surprised by it, but a number of payroll companies that have said, hey, you know what, you don't really have to give us any of the information. We'll just make note of it, which kind of surprises me. But basically on the Form 941, and this is, I'm just going to say, this is why if you made it to here, you're interested in this, the seminar is 2 hours. I'm going to do live Q&A, and I'm going to go through the calculations, and I'm going to go through why I think 90% of the businesses should easily qualify for this credit. And I'm going to walk through this more specifically to those that are now needing to take it. So I'm just showing you very quickly. But when you're looking at the Form 941, you are supposed to indicate here your total advances, okay? And part of the reason I want to note that to you is that it talks right here about line 13D. So line 13D on the Form 941 is you would list, okay, here's what I put on the Form 7200. So the reason you can't file a Form 7200 after you file a 941 is that you have to put down what it is that you reported on your Form 7200 on the 941. Now, it also references over here line 11C. So what is that? Line 11C is your non-refundable portion of the employee retention credit. And then we have a worksheet that goes along with it. Okay, so we got a worksheet that we have to work through. And what is that worksheet? Well, the worksheet is on the 941, it's when you're now showing, hey, here's my qualified wages, and then you're taking the credit, and in 2020 it's 50%, in 2021 it's 70%, but you're saying, here's the wages, here's the credit, but in the minutia technicalities of all this, the credit first offsets the employer portion of Social Security tax. And then after that, it becomes a refundable credit. Now, hear me on this. It all works out in the wash the same, but the technicalities of reporting on 941 still need to be done. And let me be more clear on this, is that if you file a Form 7200 because you did not already file 941 for that quarter. The Form 7200 is basically just saying, okay, we're going to go ahead and tell you right now, IRS, I'm pulling up this Form 7200. You're just going to tell the IRS, hey, listen, here's my credit, boom. But you didn't provide any information on the Form 7200. So it's on the 941 that you're putting this information. And so the credit is broken into two. One, the credit is it offsets the employer portion of Social Security tax. The rest is refundable. Now, don't worry, because here's how this works. If you've paid in all your payroll taxes, okay, and you put in for a credit, you're not going to get any more or less than what your actual credit is, because you would have paid in all of your taxes, and then you're now getting a credit, which all of it's going to be refundable. And that's like, whoa, that's a lot of calculations there, JJ. And you're right, but the point is that all those technical calculations got to be done on the Form 941. So again, that's why you can't file 7200 after you file a Form 941, but this is also why for those payroll companies out there that for whatever reason are pretending that they're not aware of these credits, which is surprising because that's what they're an expert in, they need to get it on the Form 941, period. So what happens though if you are in a situation and someone had already filed that for you? Well, what the IRS came out with that we're focused in on here is saying, and we'll skip right down to the bottom, and the IRS says, we understand this might be difficult to implement so late in the time frame to file your fourth quarter return. So in terms of Form 7200 and or your Form 941, you do not have to use the limited fourth quarter procedure. All they're saying is if you already filed 941, then you're going to go to a 941X. But it says you can instead choose the regular process of filing an adjusted return or claim refund for the appropriate quarter to which the additional ERC relates to Form 941X. Now, what's interesting on that is that the IRS is indicating this, that you can just go back and amend all the quarters. Ooh, that'd be a lot of extra work, right? Do a 941X for all the quarters. Ooh. You can just do it all on your fourth quarter 941X, okay? And the reason that we also know that, because part of what I'm looking at here is this is the law right here, the stimulus. So it's escaped me, the Consolidation Act, as they call it, but the Stimulus Act. And this is the actual law. Look at it, it's 5,593 pages. And we're on page 4,932. But anyways, what it indicates here is this. It says special rule. So for purposes of Section 2301 of the CARES Act, that's the section that talks about the employee retention tax credit. But anyways, what it says is that an employer who has filed a return of tax with respect to applicable tax, employment taxes, that's Form 941, before the date of the enactment of this act may elect to treat any applicable amount as an amount paid in the calendar quarter in which includes the date of the enactment of this act. My interpretation of that is this: if you have anything that you had a credit before the date of the enactment date, that's December 27th, 2020, then you just report it all in that quarter. So that means that you could, if you caught it just in time, you still have a little bit of time. It's about 2:30 in the morning. So now it's the 26th of January. So you can still put in that 7,200, mark it fourth quarter, put everything on there for your credit. And then you would need to reflect it on your Form 941, all fourth quarter. But then if for whatever reason you didn't get 7,200, why? Well, because the 941 was already filed and now you're staring down the 941X. You are allowed to just put it all on the fourth quarter 941X. It's not going to yield any better or different result for you, whether you do each quarter, because these are just refundable credits and they just carry over and carry over and carry over. That's why the intent of Congress was, well, we'll just let everybody catch up, if you will. But on that Form 941X, you would really want your payroll company to help you with this. It looks a little more daunting than it is. It's kind of like anything. If you know how to do it, it's easy. But nonetheless, 941X, you're basically going to put this information in, answer some questions, et cetera, and then you'll see here that you put in your refundable portion of the employee retention tax credit, and then it comes down to, what are your wages that were for the qualified retention tax credit, and then you've got to list down, why are you making the correction and all that good stuff. I think there's one other spot that you put the employee retention tax credit. Yeah, so right there, the thing to note here is that it'd be a pain in anybody's backside to have to go back and do one of those for all quarters, so you can do it for that. But it says if you choose to use the limited fourth quarter procedure, you should add the ERC, that's the employee retention credit. People call it employee retention tax credit as well, attributable to the second and or third quarter qualified wages and health expenses on line 11C or 13D of the original form fourth quarter 941, along with the ERC for qualified wages paid in the fourth quarter. You should also, and then it gives you that minutia working through. You got to do the steps and do the worksheet and be able to show that, okay, got this credit, okay? And so at the end of the day, you could probably read that and some might go, well, wait a second, it says that I can only do it on my original Form 941. But that says down here, well, but if you've already filed your 941, then you can do a Form 941X. And it also indicates that you can follow your regular process. So here's the thing, the IRS is getting ready to get a flood of 941Xs. What I feel confident in is that you would be able to do all of your credit on an amended 941X. You read through that, basically what they're indicating is if you don't get the opportunity to put it all on your fourth quarter 941, because they surely weren't anticipating that JJ the CPA was in the house and was able to get 7200s in on my clients before the 941 was filed for fourth quarter, which is the normal way of going. Anyways, with that being said, here's your course of action, okay? So today's January 26th. If fourth quarter 941 has not been filed, file the 7200, put it all on the fourth quarter. With the Form 7200, it goes to a specific unit at the IRS. You fax it in. It's the only way that you're able to submit the Form 7200. And the reason that you want to fax that in is that the IRS unit that's following that is all they're doing is taking these Form 7200. So you can see here at the bottom of the Form 7200, and it's good to note this because this is how you would do it potentially if you'd like to take advantage of this in first or second quarter 2021. But you can see you fax it right there at the bottom. They're supposed to get you that money by check within about 10 days, and they do. But the Form 7200 is going to get you your money the quickest for any retroactive credits for 2020. If you don't want to file 7200, but you have not filed 941, well, then you can report all the information just on 941. Now, let me be clear. If you file 7200, you still have to reflect all of that on the 941 fourth quarter. But then some will say, well, then why don't I just do it all on the fourth quarter 941, JJ? Why even mess with the 7200? Well, because sometimes a little extra work, if you will, which filing a 7200 is not hard at all, it helps you, right? So this little bit of extra work, what did I tell you a second ago? You're going to get your money a lot quicker if you're able to file the 7200, which means you hadn't filed 941 for fourth quarter. So let's just say you go, you know what? I don't want to fill out the 7200, JJ. I just want to do it on the 941. Okay, great. Because you're still going to have to reflect all the same information on Form 941, okay, whether you filed 7200 or not. The wages, the credit, how it offsets the payroll tax, Social Security of the employer portion, and then the refundable, blah, blah, blah. The difference is if you didn't file 7200, then on your Form 941, you're either going to mark it as a refund or you're going to ask them to carry over a credit to the next quarter, right? But if you're wanting your money back and you want that check, if you will, it's just going to take longer for the Form 941. Now, you might have a payroll company that says, hey, we're going to e-file it, you get it quick. Okay, that's great. Then go for it. My experience, going on 28 years in the biz, it just goes into a different unit when you file a Form 941. It just goes into the system. It just goes in with the big batch with millions and millions of other quarterly employment reports, where with Form 7200, it goes to a department. Their job is to get that check out ASAP. Now, let's say you filed Form 941 already. Then you file a Form 941X. You can either mark it for refund and or a carryover. Now, we'll tell you this, and I definitely don't want to be dramatic on it, but when you file anything amended with the IRS, no, it's not a flag, okay? But somebody's got to look at that typically, right? Somebody's got to, if you're filing it by paper, somebody's got to get it, open it, boom, have someone experienced. They got to enter all that in, double check or whatever they're going to do. It just takes more time. So that's why I was hoping that the IRS would have come out with something that would have maybe been like an amended Form 7200. Maybe they'll do that. And I mean, when I say an amended 7200, an updated Form 7200 that would just have a box on there to go, okay, hey, we already filed 941, but here's the information to know, okay, of how we got the wages, how we did the credit, and then, hey, send us our money, IRS. But nonetheless, on this Form 7200, it is fairly simple. Little thing to note if you're not familiar with, IRS forms and whatnot. But you'll always know what version you're using because it always has it right underneath the form. It also is down at the bottom right here. So I am anticipating that they're going to have to update this. For starters, okay, what I told you about on the technicalities, this thing only still shows, second, third, or fourth quarter. They at least need to update it to show first quarter because first quarter 2021 people are able to take the credit. So I was kind of assuming for those that were watching this video kind of knew already the basics, but I don't want to end the video without just real quick telling you the basics on this one. And that is this: if you are in a situation that you're an employer, you got to look really hard to see if you qualify, because I don't know how you don't. There are some provisions if you're 100 or less employees, now 500 or less employees, which I know I keep talking about my seminar, but in my seminar, I'm gonna walk you through that. And in fact, let me see if I can pull this up real quick. This is one of the things that I have in the seminar. So this is an executive summary that I put together. Now, if you've taken my seminar before, this might look similar, but I'll tell you this, on the PowerPoint that I'm putting together, of everything that I'm putting together, it might be this same, 10 slides out of 100 that would be what I presented before. But anyways, you could watch this video back, pause it. Here's to see this screen if you'd like. But nonetheless, it's 50% of $10,000 of wages in 2020, starting March 13th through the end of the year. But it's $10,000 of wages for the entire year. In 2021, it's $10,000 of qualified wages in each quarter, and it's a 70% tax credit. So $5,000 per employee for the year on 2020, $7,000 per employee potential per quarter. So that's $14,000 altogether if you had employees that qualified for this in both. So, obviously you're in business. It's you had to have been affected, which I think there's a wider net there than many of us are really considering, which is why I would love it if you came to the seminar. And I'll just mention to you, because if you made it to here, you're probably pretty interested in the ERTC. But in the seminar, if I didn't mention it, it's $97, pretty darn reasonable. But nonetheless, when you sign up for this seminar, what I was trying to tell you is you immediately get access to everything, and including my research video. I probably spent 4 hours on it tonight, but putting together my research video on why I feel so many businesses qualify for this. So it's kind of it's a deep dive. Not as many people would probably be interested in it anyway. So that's why I made it part of this seminar. But the other thing is that you do qualify, obviously, if you've been, partially shut down or fully shut down. But again, there's so many ways that you qualify for this. Anyways, or it's not both, or you have a reduction in your gross receipts by 50% in 2020. That's a quarter in 2020 compared to a prior quarter in 2019. Now it's just a 20% hurdle when we're talking about 2021. So anyways, little executive summary there for you. And heck, since I've kind of gone through this, well, never mind. I'm not going to pull that up. I'll put a link in this video to the video that talks about my seminar. How about that? So back to this. If we're looking at this from the IRS, yeah, it came out on the 22nd. Like, where was that? I think I showed you at the beginning. I mean, you go to the news, there is nothing on here about that, which is shocking. Look at here's on the 22nd. Urges taxpayer to gather tax documents. That doesn't have anything to do with this. Get a federal tax refund faster, right? Here's the 19th, there's the 25th. Nothing about it. So anyways, thank you to Accounting Today for doing this. It's honestly, I looked and they're the only ones that have written about it so far. So again, thank you, Michael. I'll put a link in the body of the video to this as well. And then I'll put a link to the body of this video. I'll put a link to the seminar page. You'll see all the things that you'll get when you sign up and immediate access. And then I'll give you a link to that video. So, all right. Hey, listen, it's 2:40 in the morning. So don't mean to ramble, but thanks for watching to here. If you're not a subscriber, hey, listen, it's worth it. Okay. I put together videos that are for my clients' benefit. You basically get to watch. With that being said, love it if you'd click it, subscribe. Hey, subscribers, love you. Thanks to getting to here. Planning on going live. I needed to get through January 31st with 1099s, PPP 2, a couple reapplies, and then the 7200s and the 941. So I'm happy to say that all of my clients that put in for PPP 2 have been approved. They have their money. The Form 7200s have all been put in. The IRS didn't open up that department. They paused it for a period of time. They didn't open it up till the 21st, which was last Thursday. So I'm expecting there'll be some money. All of my clients will be filing their Form 941s with the payroll company at the end of this week. That way we've got a nice little window from when we filed 7200s to when the 941 got filed. So should be clear picture there. And then we have Form 1099s due, and we have this new Form 1099 NEC, not net employee, non-employee compensation. Plus we have a couple other things that we got to tackle here in January with our clients on some other things local to us. So it has been nuts. Fun, love it. And I've been doing all these great seminars. So if you've been at one of my seminars before, thank you so much for that. Check out this ERTC. It's expanded. I'm very excited about it if you can't tell. All right. Hey, thanks for tuning in. Love it if you'd subscribe. And then don't you ever forget. Oh, I guess I got to take this off this share. This is on that Zoom. I don't have Amanda up with me. So the technology's escaping me. Okay. Hey, listen. I'm going to do one more video. Thank you guys. I really appreciate you. And then don't you ever forget, you've never met a CPA quite like me. Did I say that twice? Maybe I did.